Welcome everyone. I'm going to be talking about exchanges, history, the timeline, the ecosystem, and use cases for exchanges. This is something that I'm super excited and passionate about because I think, when, there's much more exchange of value in society, it's going to encourage society to thrive. And it's, at the moment, there isn't as much innovation in the space of exchanges as there should be. So really excited and looking forward to it. Going to start off with stock exchanges. So stock exchanges have been around for hundreds of years. One of the first exchanges was in the 1600s by the Dutch East India Company, and also the ships which would go between Europe and Asia. There's also talks of bonds being issued, like in the Amsterdam Stock Exchange in the 17th century, as well as, in many different major ports and capitals of the world. There was always a stock exchange being issued, or a stock exchange being created to support the trading of assets and allow people to invest and support different project initiatives. Here you can see the London Stock Exchange from the 1700s. So you can see it's got high ceilings. All these people are effectively trading securities with one another. And here you can see, how people used to look at different stocks and shares and securities using the newspaper. It would show you the performance of different stocks and shares. Here you can see here we're going to be talking about the listing requirements for being on the stock exchange. So on the right, you can see a picture of the Facebook IPO listing. This was the biggest technology IPO in American history to date. And it was this third biggest IPO ever in US history after Visa and General Motors. It raised a total of $16 billion. So quite a lot of money, and valued Facebook at $77 billion. In terms of, how you would list on a stock exchange, different stock exchange have different listing requirements. To be listed, for an example, the New York Stock Exchange requires a company to have issued at least 1.1 million shares, stocks worth about $40 million, and it must have earned at least $10 million over the last 3 years. So about $3 million a year. NASDAQ requires a company to have issued $1.25 million, and the stock must be worth at least 70 million, and they must have earned $11 million over the past 3 years. The London Stock Exchange, this is the main stock exchange in London, in the UK, requires a project to have at least £700,000 £700,000 worth of market cap, 3 years of accounts, and 25% of the company needs to be floated, meaning they need to sell 25% of the shares. It needs to also have sufficient working capital for at least 12 months. So it needs to have enough money to be running for 12 months. And then a lesser known stock exchange like the Bombay Stock Exchange requires $3.5 billion in terms of a market capitalization and a minimum float, a minimum public listing of $1.4 million. So it needs to raise at least $1.4 million. So as you can see here, the requirements for a stock exchange are generally quite high. The fees are really high. And also super interesting to touch on the ownership of stock exchanges. So they usually started off as mutual organizations, but owned by the stockbrokers that helped create the stock exchange. However, once stock exchanges become demutualized, basically the members sold their shares in IPO, the mutual organization became a corporation. So things like the Australian Stock Exchange, Euronext, NASDAQ, the São Paulo Stock Exchange, these became publicly traded securities too. So there's also another type of stock exchange, for instance, the Shenzhen or the Shanghai Stock Exchange, where these are created by the government bodies and they're regulated by the securities exchanges. So really interesting, the idea of privatized versus public stock exchanges. Here you can see some of the biggest stock exchanges. So the 16 biggest in the world have a market capitalization of over $1 trillion each. People sometimes call it the 1 trillion club, and they account for 87% of global market capitalization in 2016. And some exchanges, they don't include companies where they're foreign based. So sometimes, you know, if let's say the New York or the Nasdaq stock exchange, they allow companies from all around the world. And you can see here, the market cap is $26 trillion with a monthly trade volume of $1.4 trillion. So it's quite incredible in terms of the amount of capital that's actually flowing and supporting different projects. Now, if you look at crypto stock exchanges, you know, these are much smaller. So, but they're fast growing. So like Binance, for instance, has generated about $3.48 million in trading revenue per day. So if you multiply 3 million times 300, let's say days a year, that's about over $1 billion in yearly revenue. So it's really quite incredible how much value it generates from fees. So if you think $1 billion a year and it's a growing industry, you know, these exchanges are really quite lucrative. I'm going to talk about two different types of exchanges. So the two main types are order book exchanges and automated market maker exchanges. So an order book exchange, here you can see the graph, and that basically details, you know, how a token or a stock or a coin or a share is trading over its period. Usually use a candlestick. So the candlestick shows you, for instance, in that minute or in that day or in that year, how high and how low it dropped, as well as how it moves on to the next part, like the next minute or the next day. Here you can see circled on the red is the orders. So at the top, you have the sell orders, and in the green, you have the buy orders. And then below that, you have the recent trades. And the buy and the sell orders help you determine what the current trading price is. So the current trading price is above the highest price at which people are willing to pay and the lowest price at which someone's willing to sell. So quite interesting. You sometimes have an issue of, you know, the buy price and the sell price being quite spread out, because the people who hold the shares, they don't want to sell it for a low price, and the people want to buy it, they don't want to pay a high price. So you have an illiquid market basically, and that's where you need market makers to basically make the bid and the ask. It's called the buy and the sell closer and closer, and that brings us to automated market makers. So we think automated market makers are super interesting and exciting, because it basically provides constant liquidity. It basically provides an opportunity for different people to trade anything in the world. Something which might be super illiquid, there still is an opportunity to trade it, and you always know in real time what its value is. It won't be an illiquid asset. So here you can see a picture of how an automated market maker works. You basically put two tokens or two coins or two things together. Here it's a TKN token and an ETH token, and then you see the liquidity provider. These are the stakers. They're staking both TKN and ETH. In the case of Unit, people stake, let's say, Unit and USD, or they stake, you know, let's say Chris token or Brett or Karina token and USD. And then when traders come and trade this token, they're able to earn fees from the people trading it. So Unit takes a 2% exchange fee, which gets split 4 ways. 1 quarter goes to the people staking, 1 quarter goes to the person who referred the trader, one quarter goes to the Unit treasury, and 1 quarter goes to the token treasury. So taking a step back, this is Mt. Gox. This was one of the first most popular exchanges. It handled 70% of the trading volume on Bitcoin, and all of a sudden, you know, it disappeared. So basically, what happened was the exchange was insolvent, and what that basically means is it was running for, you know, a number of months or a number of years, but it never had the funds which it said it had. So, you know, people were depositing Bitcoin, they were buying Bitcoin, people were depositing money, but all of the time it didn't have the underlying assets which it said it has. This is super important because, you know, it's super unfair. You're basically tricking people into believing that there's underlying value when there isn't. So we're super excited to provide the evolution of security, evolution of this providing security for, you know, the Unit community through our exchange by people being able to see exactly the amount of funds which are backed up by the decentralized protocol. So this is really interesting. If you look really closely, the lowest ask price was $122. So, you know, Bitcoin was 600 times less than it is now, of like 500 times less. So it's quite incredible how it's gone up 500 times since this screenshot was taken in 2013, only 8 years ago. To go up 500 times, quite amazing. Coinbase, so this started after Mt. Gox, and it started off as being an easy way to buy Bitcoin. So anyone could create an account and buy Bitcoin. But the thing about Coinbase was they didn't actually run an exchange to begin with. All they were doing is buying Bitcoin from other exchanges and then selling it to their users. And it was quite amazing the amount of fees they were making. They made it really easy to buy Bitcoin. So anyone could just use their credit card to buy it. And they were using this money to buy Bitcoin on the exchanges at a huge markup. So it's really good because it got the everyday person to be able to buy Bitcoins and digital assets, and it allowed the exchanges to profit from that too. Next is Binance. So Binance started in 2017. They raised about $20-something million, $30 million in their ICO. And in a period of 4 years from when it launched, the CEO of Binance, CZ, he used to work at OKX. He was the CTO of OKX, which is one of the top exchanges. And then he felt that there was an opportunity to launch something bigger and better. So in 2017, he started Binance, and it's done exceptionally well. Now it's grown to be one of the biggest exchanges in the world, and incredibly profitable. One thing that was quite cool is most of the some of the value which was created went to the BNB holders. So the BNB holders are the Binance token holders. So it wasn't just the exchange that benefited, but the customers, employees, and the customers of the Binance token. I was on a panel with CZ, and one thing I asked him was, hey, how do you feel about the fact that employees and customers get a piece of the BNB token? And really nice, I asked him, how does he incentivize his employees and customers to have aligned incentive? And what he said is that, he doesn't have employees. So Binance isn't a company, it's an organization. And, all of the contributors, the people working on Binance, own BNB tokens, and there is no equity basically, which I thought was really cool because he gets the future of it. One thing that he, I think, doesn't quite understand yet is the concept of the token economy, the idea that in the future everything will be traded and token driven. So I'm really excited for us to pioneer that and then be able to collaborate with organizations like BNB in the future. Next, going to talk about Bancor. So Bancor was also a friend's company. They raised $153 million in 3 hours. They were one of the biggest ICOs in 2013 and 2017, and really amazing because Bancor made it possible to trade any token. So they use this concept, an automated market maker. People basically traded against a pool, which was really quite amazing because a lot of people looked at some of the recent DeFi protocols this year, and Bancor started that 4 years ago. So and one of those protocols which recently started was Uniswap. So Uniswap, as you can see here, you set what token or coin you want to trade from and what you want to go to, and you essentially trade it against a basket. You're trading against an exchange pool. This is very similar to what we do with Unit, and largely inspired by this idea of automated market making. We're excited to provide this feature to the entire world so that everything can be traded and cooperatively owned. Here you can see how the exchange and the staking works on Unit. Basically, people go on to the particular token here. In this case, it's the music token, and they choose, they hit stake, and then they stake 2 forms of token. It fills up the pool, and then people can exchange against the pool. So yeah, I'm looking forward to seeing how we can create, a global exchange that powers the entire economy, and really looking forward, to teaming up with people and collaborating. So thank you so much, everyone. Really appreciate the time, and please feel free to reach out. And we're actively looking for team members, partners, contributors, advisors, and lots more. Thank you so much.